Good morning, everybody. It's Wednesday, November 27th. We're going to start our review of yesterday and get prepared for the final trading day before the Thanksgiving holiday. Did you follow the flows yesterday? Did you pay attention to the headline and the marketing that came out on the new all-time high and all-time closing high on the S&P that was conveniently left out on Monday? Are you ready for the tail risks and the flows today? Let's go ahead and dive in to this. So yesterday we had our move down early in the morning in initial balance in A and B, and that was coming from those insurance flows coming into the market as people wanted to buy in that first hour of the day. And that was very evident at 7 a.m. We are grossly underinsured, and then by 10 a.m. we are now overinsured, and that put a floor in the market. And again, if you know where to look and how to pay attention to these, you can then ride the back of these size traders when they show their hand and understand what's going to come into the market and come out of the market. The rest of the day, again, was our insurance sellers collecting premium to get their paycheck. So we moved up to collect all those premiums, and that was for all the risk they took on for the FOMC. And that was into the headline print of new all-time highs and new all-time closing highs. In our overnight session, we stayed up all night. So this pattern we've seen several times now these last couple weeks. Globex opens, holds up until London. Once London opens and that vol valve is open, we see the move lower. And the market returned right into yesterday's range and value. And now we're just chopping around ahead of our data release at 8:30. So a quick reminder before we get into today's plan, derivatives trading is inherently risky and past performance is not indicative of future returns. If we look at our positioning, again, not much of this changes on a week by week basis. Fund managers are still 91% invested. Our long-term commercials are still net short, and we won't get that new data until it comes out either Friday or Monday when the CFTC releases it. And market makers on alterations are in risk compressing mode. We've mentioned that several times now that this makes them 10 feet tall and bulletproof as we come into the holiday. And we saw that in our flows. We saw the down move early in the week as we gapped and trapped people, collect all the insurance premiums and move up, and then a smaller version of that yesterday as we come into the holiday where our risk window will close around 11:30, volume dries up, and that will lead into those condensed time factors. There is minimal insurance today ahead of the data with underinsured rate around 40%. So not as much as other days, not as grossly underinsured, which means that if we do get flows coming in, it's not going to be as strong. But this does bring about the tail risk on data for an early flush ahead of PCE at 10 o'clock. As our mechanicals, if we look here, we've got a major bid in the market at 60.20. And then our mechanical side of the market is still non-existent, only $17 million or $170 million coming in between 60.28 and 60.60. Again, if we look for comparable looking up, our big risk here is at 60.88, where we will get a $6 billion offer coming in the market. So 170 million versus 6 billion. That's why we say that's small, even though to the average retail person, 170 million is a large amount. So the breadcrumbs that we're going to follow today are that people are underhedged for the pre-market data, which opens a small risk window. The all week fund managers have gone into the market without protection. So the fund managers are taking some risk and not paying that extra insurance for the overnight. But then what happens is they have to buy that early in the day ahead of that data. So again, that's what we want to watch. And without that, that opens the tail risk to the downside. And after PCE, there isn't any significant data outside of the treasury auctions. So be mindful of the automatic flows that are going to come in from Vana and Charm just by nature. And then that time condensed, time weighted average price changes, and that's going to affect the market as well. So For today, we're looking for rotational price between 60.23 and 60.47. Our pivot is 60.34. If we get under 60.23, our pivot is 60.10 and our target is 6,003. Now, if the market has a big tail risk on the data, then breaking 6,003 will change our weekly market makers and our short-term market makers, and would change them heading into Friday, which is month end, weekend, and a shortened trading holiday. So if that occurs, before that occurs, we would expect big defense to come in. If that occurs, though, we will target 59.93 and then 59.72, where the rest of Chicago will be waiting on the market to come to. Over 60.47, our pivot is 60.66 with a target of 60.84, right where we have that $6 billion offer coming in. So that's it for today, guys. Stay safe trading out there ahead of the big data coming in at 8:30 and 10. And have a great holiday and Thanksgiving.